Today is the day, the official launch into one of my favorite series to do every single year, top stock ideas for the next year. And in today's video specifically, we're going to take a look at 6 of the top AI stocks for 2026. And if you stay tuned throughout the entirety of today's video, I might even throw in a bonus 7th. AI has ruled the stock market over the past year and really kept everything afloat. CapEx spending has been off the charts, expected to surpass $400 billion in 2025, and next year in 2026, that number is going up over $500 billion. So it's pretty safe to say having a good chunk of AI exposure has been a good thing, and I believe will continue to be a good thing moving into 2026. And the great thing about it is the fact that there's so many different components, there's so many ways to invest in AI. So make sure you stay tuned throughout the entirety of today's video. And before we begin, show your appreciation by just simply clicking that like button down below, subscribe to the channel, and let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we jump into today's video, let me thank today's video sponsor, which is Masterclass. Masterclass is a popular online learning platform where you gain access to more than 200 different classes and topics, from leadership, cooking, photography, writing, finances, and much more. And the best part is the fact that this is an all-encompassing membership. You don't have to choose specifically which classes you want to take. You get access to their entire library, and that's going to be billed with plans starting at just $10 per month, billed on an annual basis. The videos are broken out well, most being around 10 minutes per lesson, each topic having around 20 lessons, so you can break it up over days, weeks, or even months, whatever fits your schedule. The videos can be streamed online, listened to in audio mode like a podcast, or downloaded to watch offline. For me specifically, one of the unique ways that I used Masterclass in the past is I like to barbecue meats and smoke meats. So I took a class to see how other experts, different rubs and different methods that they use specifically to help refine my skills. During the holiday season, you could get up to 50% off an annual subscription with Masterclass just by utilizing the link down in the description below or scanning the QR code on your screen so they know I sent you. It's time to learn from the best so you can be your best with Masterclass. All right, let's jump back into our video taking a look at 6 of the top AI stock ideas for 2026. Beginning with AI stock number 1, which is going to be Micron Technology, stock ticker MU. And when it comes to Micron, they've been one of the best performing stocks in 2025. Yet I still believe they're overlooked and underappreciated. Everything we've heard over the past few years when it comes to AI has been centered around GPUs because that's correlated closely with NVIDIA. However, all of these GPUs, they're going to be useless without memory. And who dominates the memory space? Micron Technology. Micron specializes in DRAM, NAND, and now high bandwidth memory, HBM, the ultra-fast memory that feeds AI accelerators from the likes of NVIDIA's top chips and AMD's chips. These HBM chips allow massive AI models to move data instantly between processors and storage, which is critical for performance. Demand for this technology has exploded, and in one of the recent earnings releases from Micron themselves, management talked about demand tripling heading into 2026. When it comes to Micron, the company currently has a market cap of $254 billion, and over the past 12 months, I mentioned it was a great performing stock. Shares are up 135%. This is a company whose share price over the past 12 months has been phenomenal. However, it's important as investors, as you manage your own money, to not let share price movement one way or another dictate what you're going to do with the stock. There's so many investors, you don't know the number of investors that I've spoken to over the years that have sold a particular stock just because it was up 50 or 70%. And what happened the 12 months after they sold it? It was up another 50 or 70%. Make sure you look at the financials and the fundamentals to help you determine whether to buy or sell a stock. When it comes to Micron, this is a company where gross margins are already recovering from the memory down cycle we saw a few years back, and now currently sit at nearly 40%. while revenues are sitting at all-time highs and going higher with that demand set to triple. And also with demand tripling and margins expanding, that's going to lead to further free cash flow. Looking at valuation, analysts are calling for an average of $17.05 per share of EPS next year, which equates to a forward PE of just 13.8 times for a stock growing earnings next year by 110%, which is incredible value you're still getting even after a 125% move in the stock. In short, Micron is no longer just an AI commodity. They are now creating the fuel for any AI server. And that leads us to AI stock number 2, which is going to be Alphabet, stock ticker GOOGL. And when it comes to Alphabet, they have now slowly become an AI titan themselves. It was just a few years ago when people were looking at Alphabet as a laughing stock. That is no longer. This is the company that didn't take the easy way out. They kept their head down regardless of the noise outside and continued to invest in themselves. They didn't go out and invest in a company getting a portion of that business, i.e. Microsoft with OpenAI. And they have now built their own program with Gemini that is as powerful, if not more powerful, than that of ChatGPT. However, while the stock was beaten down and seemingly going nowhere, this is the opportunity that I took. And I said this was that accumulation phase. That's the exact term I used within my Discord community, the Stock Investors Edge, saying, looking back on this period in time right now, all of you are going to look back saying, I wish I bought more. And that's what everyone is saying right now, because I was pounding the table on valuation, looking at a stock that was seemingly being priced as if it wasn't growing at all. I accumulated more and more shares. And where is it sitting now? The number one stock holding in terms of single stock in my portfolio today. And if you're interested in seeing all of my stock plays anytime I buy or sell out of a position, or want to see my option plays, then consider becoming a subscriber to my newsletter, The Stock Investors Edge. We have a full Discord community where you can see all of our trade alerts. Check out the link down in the description below. Getting back to Alphabet, the company currently has a market cap of $3.8 trillion, making it one of the largest companies in the stock market today. And over the past 12 months, shares are up 85%. But look at that chart to the right of the screen, and you can see how the vertical move has taken place in an aggressive manner just since the middle of summer. Again, this was simply a stock where investors were overreacting to a lot and also discounting way too much. This is a stock where their AI presence runs very deep, whether it's Google Cloud, Google Ads, YouTube, the list goes on. A very diversified company. Alphabet is a company that has gained a lot more notoriety of late for their TPUs, which are their custom AI chips built in-house to train and deploy large models efficiently, and they're already in use at scale. The company's also rolling out their latest versions of Gemini, which is their next-gen large language model that competes head-to-head with that of OpenAI's ChatGPT. Combine that with AI-powered ads, AI-enhanced YouTube, and productivity tools like Duet AI Inside Workspace, and you can start to see the picture. Alphabet is integrating AI into every corner of their ecosystem. Financially, though, the company is a money-printing machine. As you can see here on this fiscal AI chart, Alphabet has generated over $70 billion in annual free cash flow, which could cover all of their debt easily multiple times, as their debt currently sits at $21 billion. This is a company with a lot to like, a great balance sheet, a great management team, seeing the monetization when it comes to AI, strong free cash flows, a diversified business. There's so much to like when it comes to Alphabet. In terms of valuation, analysts are looking for the company to grow earnings by just 6% in 2026, which I believe is quite comical, and 15% in 2027. The company will, I believe, easily reach double-digit EPS growth in 26, if not be closer to 15%, but a lot of that will be predicated on their CapEx spending. But using the current estimates, shares currently trade at a forward PE of 28.6 times. When I was pounding the table on the stock earlier in the year, shares were just trading at 17 times, which is crazy. 28.6, much more respectable. I believe Alphabet is a tremendous company, and we're starting to see the growth in AI, and I think that momentum is going to continue in 2026. But for me specifically, I'm probably not going to add and jump in right here because, as I mentioned, it's already the top stock in my portfolio. But if you had no exposure to the name, I think this would be a decent spot to maybe nibble a little bit and buy more heavily on any pullbacks. Alphabet, again, is not a company that's going to move quickly like a startup, but their AI scale is unmatched. And that's going to lead us to AI stock number 3, which is going to be Broadcom, stock ticker AVGO. And Broadcom has quite simply become one of the biggest horses in this AI race. And over the past 3 years, it's been one of the best stocks to own in your portfolio, with the stock climbing more than 600% over that period. Broadcom builds networking, switching, and connectivity chips that allow thousands of GPUs inside data centers to talk to each other at lightning speed. Think of NVIDIA's DGX servers or Amazon's AI clusters. Broadcom's technology moves the data between them. Their custom ASIC division designs chips for major cloud hyperscalers, including the likes of Meta, giving it a strong foothold in AI infrastructure. Broadcom is also capitalizing on the transition to optical interconnects, crucial for scaling high-speed data transfer in AI workloads. And beyond hardware, Broadcom's acquisition a few years back of VMware added a huge enterprise software business that has strengthened the company's recurring revenue and expanded profit margins. The mix of AI hardware and software gives Broadcom a dual advantage few can match. When it comes to the company's size, they currently have a market cap of $1.8 trillion. And over the past 12 months, shares have climbed 129%. Like Alphabet, Broadcom is another huge generator of free cash flow. As you can see here on this fiscal AI chart, it's almost a perfect chart. Higher and higher free cash flow for more than 10 consecutive years. Over the past 12 months, Broadcom has generated nearly $25 billion in free cash flow, with margins sitting at 41.6%. Looking here at this chart, you could see the breakdown of revenues between segments of semi-sales and software, and that VMware acquisition has provided a nice boost to software in the past 18 months or so. In terms of valuation, analysts are looking for the company to generate EPS of $9.32 next year, growing 38% year over year. This gives shares of Broadcom a forward PE of 41.7 times, which is wild to think of because it wasn't too long ago this was a stock with a PE around 20. With the current forward PE and growth rate, this gives the stock a PEG ratio of 1.1, which is rather solid. Broadcom is a company that continues to generate higher and higher amounts of free cash flow, which allows them to reinvest into future growth, but also pay a safe, reliable, and growing dividend. This is a great AI stock to have in your portfolio moving into 2026. And when it comes to analyzing and valuing stocks, my number one go-to resource that I utilize is Fiscal AI. It's where I'm finding all of the charts that you're seeing in today's video. And right now you can try out Fiscal AI and get 15% off any of their paid subscriptions by utilizing the link down in the description below. And that leads us to AI stock number 4, which is going to be AMD, or Advanced Micro Devices. And again, this has been one of my favorite stocks to own in 2025. Not only have I held the stock, but we have been doing a wheel strategy in my options community. Again, that Discord is down in the description below, where we have generated thousands of dollars on shares of AMD. AMD is a company finally gaining traction in this AI accelerator market with its MI300 series chips, which are being adopted by Microsoft, Oracle, and Meta, just to name a few. These chips combine CPU and GPU architecture in one unified package, designed for training and inference of large AI models. The exciting part about AMD is the fact that we don't need AMD to catch NVIDIA. We just need them to close the gap. Just closing the gap slightly would generate huge shareholder returns to us investors. When it comes to AMD, the company currently has a market cap of $351 billion. Over the past 12 months, shares are up 54%. But that doesn't tell the whole story, because this was a stock that was down roughly 40% at one point in April. That is a huge turnaround. Looking here at this Fiscal AI chart, you can see the company's revenue broken up by segment: data center revenue, client revenue, gaming, embedded. But that's a lot of colors. Let's just focus on data center. And you could see the growth here just the past few years has been quite impressive. That number should continue accelerating higher as more cloud providers diversify away from just simply relying on NVIDIA's GPUs. Looking ahead, analysts are expecting AMD to generate EPS of $6.44 next year, growing at a 62% clip year over year. This gives AMD shares a forward PE ratio of 33 times and a PEG ratio of just 0.5, which is extremely intriguing. AMD is another fascinating AI story. It's that challenger story. We don't need them to catch NVIDIA. although that would be fantastic. We just want them to close the gap. And that's going to lead us to AI stock number 5, which is going to be IREN Limited, stock ticker IREN. And when it comes to these next two positions we're going to talk about, these are going to be these higher volatility type positions. This is more of a speculative type play when compared to the first 4 stocks that we've looked at on this list so far. So I want you to know that going in. However, when it comes to IREN, this is the company I like a lot moving forward with this AI build-out story. Originally, IREN was built as a Bitcoin miner, but the company has reinvented itself as a clean energy-powered AI data center provider. The company owns and operates large-scale computing facilities in regions with abundant renewable energy, giving it some of the lowest electricity costs in the world. Why does all of this matter? Because AI compute demand is exploding, but power is the bottleneck. IREN is now allocating portions of its existing infrastructure to AI GPU hosting and high-performance computing, essentially renting capacity to companies that need to train AI models but don't have the facilities. The company currently has a market cap of $13 billion, making it the smallest on our list today, and over the past 12 months, shares are up an impressive 215%, but the stock's in the midst of a nice-sized pullback. As you can see here, revenues have been growing quite fast in recent years. The company is still relatively young, and they're still relatively small numbers compared to the stocks we've been looking at thus far. When it comes to analysts, they're also pretty upbeat on this stock, giving it a 12-month average price target of $84, implying massive upside from current levels. If management can execute on all of its goals here, this is a company that can transform itself from a niche miner to a major AI infrastructure play. And that's going to bring us to AI stock number 6, which is going to be Vistra Corp, stock ticker VST. Now, IREN we just went through is probably the most speculative name on the list here today. When it comes to Vistra, it might be one of the most overlooked AI plays on the list today. When it comes to AI, everyone talks about chips and data centers, but it's the energy. We just talked about it with IREN, but IREN needs energy as well, and it's all a bottleneck if you don't have the power to run everything. That's where Vistra comes in. These data centers are energy-hungry monsters, and the rise of AI has sent electricity demand through the roof. Without the proper power, all these chips and data centers don't run. Vistra, though, is one of America's largest power producers, operating a diverse portfolio of natural gas, nuclear, and renewable plants. As hyperscalers like Amazon, Alphabet, Microsoft race to build new AI data centers, Vistra's generation assets become more valuable. In fact, analysts estimate that AI-related demand could add several percentage points to U.S. electricity growth over the next few years, something the grid hasn't seen in decades. Vistra is expanding its nuclear and battery storage operations, providing the stable, on-demand energy that AI infrastructure desperately needs. When it comes to the company itself, they currently have a market cap of $59 billion, and over the past 12 months, shares are up 4%, but down nearly 20% from its recent highs back in September. This is a great secular growth story for a key clog in this whole AI build-out phase right here. And I bet you there's a lot of investors out there right now. If you're looking at your portfolio and the sector exposure you have, energy, utilities might not be something you're overexposed to. This is a way to gain exposure to those sectors while still investing in AI. Vistra, like most utilities, also pays a dividend, albeit not much, but it's also a dividend growth stock, increasing its dividend at an average rate of more than 11% over the past 5 years. So maybe just a little cherry on the top there. Analysts are also upbeat on the stock, rating it a strong buy with an average 12-month price target of $240 per share, implying more than 40% upside from current levels. In this world today, everyone is obsessed with talking about AI chips. But again, it comes back to the energy component. They're all for nothing without the power, and that's where Vistra comes in. So there is our 6 stocks, but I mentioned if you stayed this long, there might be a bonus. And did you really think that we were going to go through an AI stock video and not mention that of NVIDIA? That would be crazy. NVIDIA has been a gem in this AI story. They're the ones that really put this whole AI story on the map. And it has been a great performing stock over the past few years. However, over the past year or so, competition has been fierce. And this is a company that's been generating very strong margins. And the thought is that with higher competition, that could put pressure on these high margins. But it's important to remember as investors, we're talking about a company that was sitting around 70+% gross margins, which are purely insane. And if they are talking about only 40 or 50% margins moving forward, and I don't personally think they will fall that much, but the stock would still look intriguing. Nvidia shares are up 25% in the past 12 months, but they have pulled back roughly 12% from recent highs, providing a bit of a buying opportunity here for investors. Analysts are looking for the company to generate EPS of $7.46 per share next year, which would amount to nearly 60% growth year over year. This would equate to shares trading at a forward PE multiple of 24.4 times. For a company growing that fast, this multiple, I believe, should easily be in the mid-30 range. And for that to happen, stock price needs to go higher. When it comes to Nvidia, it's simply not a stock that's going to have those 500+% 12-month moves anymore. But I think it's still a key component of this AI race. Could there be margin compression? Sure, but we're talking about dipping from 70 to maybe 55, 60% margins. And with the EPS growing at 60% clip at a multiple in the low 20s, that just doesn't match. And this isn't a stock that I want to miss out on. And it still is in with my portfolio, and I'm selling puts on it to buy it potentially at a lower price. So there we just looked at 6 top stock ideas for 2026, and I even gave you a bonus with that of Nvidia. Down in the comment section below, let me know, how would you rank these 6 or 7 stocks from highest, number 1 being strong buy, all the way to the last stock that you probably wouldn't buy on this list? Let me know in the comment section down below. And if you haven't done so, make sure you smash that like button down there. Subscribe to the channel, and we'll see you in the next one. Take care.